Hi everybody, welcome to the Finance This Property That podcast. My name is Dion Fernandes and I am a mortgage planner and finance professional. My goal is to empower financial legacies for generations, and I look to do this by using my over 13 years experience in finance and having special guest speakers like financial planners, accountants, buyer's agents, family lawyers who are experts in their field to provide knowledge and free education. And without further ado, let's get into our episode today. Hey everybody, welcome to this episode of Finance This Property That. Returning guest for the second time, George from We Cover You. It's only George. Darren couldn't make it today. He's probably lifting too many weights. Got to eat the carbs. But Darren, you're here in spirit. Welcome. George, nice to have you back on.
Pleasure to be on, Dion. And it's good. Probably been about 7 months since we've been on. So
I think March, April this year you started your business, and then we had you on not too long ago. So We Cover You, insurance brokers. How's it all been, mate? Like April, May, June, July, August, September, October, November, December. 9 months.
Yeah, it's been a whirlwind 9 months. We've had a very steep learning curve, but it's probably been the best 9 months of our lives. You know, working together, opening a new business. Every single day we pick up a new client. We've built we've built a very good community of referrers who have trusted us, obviously from our past, but we've met a lot of new people. Thanking you, Dion, for the amount of people that you've sort of connected us to. But just in general, it's been an absolute whirlwind. We're dealing with, a lot of commercial clients, a lot of investors, a lot of small businesses. And I think we've really stayed true to ourselves in trying to help small businesses. Yeah.
And I think that was one of the big, we were talking off camera and stuff like, your vision was to do it your way. That's one of the conversations we've had, early on, do it your way. And now you're getting that opportunity to do it your way. And I'm assuming, and correct me if I'm wrong, no looking back now.
No, not at all.
It's the best move you've ever done.
I said this to Darren. I almost say it, every couple of weeks. Why didn't we do this 3 years ago?
Because it wasn't the right time.
Yeah, probably wasn't the right time. But looking back now, taking that jump out of the corporate world and, opening up your own small business comes with a lot of hurdles. But I think the most self-fulfilling thing is that you get to help people every single day.
Yep.
These days in the insurance world, things aren't easy for people.
What is one of the big key learnings that you've learnt in the last 9 months?
To be honest with you, Dion, I think probably the biggest key learning that we've learned is you cannot fit a square peg in a round hole. So what I mean by that is, clients these days, they're purchasing different types of businesses, different types of properties. Properties have different things on the land, say commercial and residential items. You've got small businesses that, may be high risk. You've got investors, that have got, different tenancies in properties. And then you've just got, your professional services that, that it's not easy to place insurance for. And I think the biggest learning that we've learned is, we've got access to close to about 150 insurers across Australia. We've got underwriters overseas in England that we have access to. And we will find an insurer that will best fit a client and their purpose, their occupation, their property, the professional service that they offer. And it's just not a one size fits all. So
and that's the same with my industry as well, right? Like we've got that access and it's so important. We just got the stat come out recently, 74% of all mortgages are written by a mortgage broker. Residential mortgages are written by a mortgage broker in Australia. I wonder what would be the percentage, and we probably don't have the answer, but I wonder what would be the percentage of people in Australia that use an insurance broker for their insurance needs. Because I could tell you, I mean, I've come to you guys, right, and you guys just basically gone, you're good where you are. You didn't, it's that you've looked at it and gone, no, actually, good where you are. Yep, they may not be the most difficult, like the easiest people to deal with, but mate, you're getting good cover, good this, good that. So you've analysed it, taken 5 minutes just to look at it, and just told me what's what. So I got that independent, unbiased advice, right? But yeah, it'd be great to know what that stat is, because I think the more we can get the word out there, because mortgage broking was the same, the more we can get that word out there, the more, I guess the better protected we can have, better conversations.
Absolutely. And I think the role of the insurance broker it's such an important role. Like I think of a mortgage broker, and I think, you go to a mortgage broker, a mortgage broker can find the bank that's going to best suit you, the best rate, but more importantly, finding the right institution that's going to provide you the funds. And I think we're exactly the same. You've got to find the right insurer that's going to best fit the client. And I think with an insurance broker, having access and us being able to have those conversations and that experience to be able to access all these insurers, it gives clients more comfort to know what they're covered for. Yep. And it could be as simple as a cafe. And a cafe, we see a lot of clients just go online in the business space, and they punch in their details and they pick up insurance. And we had a client the other day who's in a professional services space, and they thought they had professional indemnity, but they actually had management liability because they went online and they just punched the details in. That's a big issue, right? Because a client who's trying to manage something that they may not have the experience for, may not be correctly insured, and because they're trying to do things themselves, it can lead to some major issues. So
you're paying for something that you're not insured for.
We're not using.
You're not insured for, and we were having this conversation before we started this podcast. When you're going yourself to if you're doing it online, or you're going to an insurance company, you have got what's called a duty of disclosure.
Absolutely.
Yeah, I've worked in insurance before. Is that duty of disclosure, and they have their set questions, and you're just answering their set questions, and what you think you're answering is your interpretation of what they're asking, and you've just gone yes, 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 yes,
because you think that's the right answer.
Correct, and because there's no one there to challenge you.
Absolutely. Like we had a client, I'll keep talking about examples, but examples bring it to life.
It's real life. This is what's happening out there.
So we had a client yesterday who is purchasing, we're talking over 20,000 square metre, nice big land, nice home on the land. And, clients would go online and just tick the questions. They would ask them if the land is, say, for example, above 20,000 square metres. Clients may just go yes, or, they may just tick it because they think it's the right answer. They may not disclose that they have farming animals on it, or they incur revenue out of the property. And for us yesterday, we were able to sort of knock out insurers straight away, because we've got a system that gives us the ability to go, okay, these insurers are going to decline cover. And we know that if a client placed cover with them and it came to claim time, they may not be able to activate their insurance for claims.
That's the whole point of insurance.
Exactly. The whole point of insurance is you're supposed to take insurance out so that when the worst is going to happen, that people can make claims so that they can get their property back to the same situation it was prior to the event happening. And so we ended up placing this client with an insurer that had no restriction on size. We were able to extend the cover to include the farming animals and disclose exactly what the client did. And the premium ended up being less than what some insurers will charge if it wasn't. So it was a reasonable premium.
Because you narrowed the risk down, right?
Absolutely.
Whereas opposed to having a broad risk, you've narrowed the risk down and gone, yeah, cool. This is what's there. Oh, yeah, cool. We get that.
We
Done.
understand that. We do that. We've got a lot of clients that support that industry, and we will offer insurance to this client. So at the end of the day, it's about finding the insurer that is comfortable with the risk. And if they are comfortable with the risk, the premium is going to be what it should be. But if you place them with an insurer who only does a few of those clients, well, of course, they're going to always charge a lot more because it's outside of their risk profile.
Or they don't understand.
Or they don't understand. Yeah, absolutely.
Because of the information you're giving them.
Absolutely.
It's not the same. Now, that's a really, really great segue into the topic of conversation today. Now, as most of you may or may not know, I do a lot of rooming house properties, right? I fund a lot, go through the funding process for that. Now, for people that don't know what a rooming house is, a rooming house in essence is a 5-bedroom house, right? But each bedroom can be rented out individually. So you've got 5 leases across it. There is a common area, which is the laundry and a kitchen, but all intents and purposes, it's like a boarding house. It's not like a university boarding house, but it is a very high yielding investment vehicle it's a great investment. They're all in, most of them are in blue chip suburbs and yielding some good rental yields there. But the one thing that I look at, and we need for most, like 99.9% of applications, is the insurance certificate, right? Now, we just talked about not having the right insurance. Now, I don't work in insurance anymore, and I used to. I know what to look for in a policy, right? And I can sort of, if I'm on the fence, I'm like, mate, you need to get it checked out. But there's a lot of insurance policies that I've looked at that just give absolute blanket cover, and it's not actually specific to the product that the client's or the investment that the client's purchasing. So I know I've seen a lot of clients to George and Darren from the team We Cover You, and I got the same feedback. It's like, whoa, hold up. This doesn't cover this, and this, and there's that need. So let's have a little bit of a chat about that. Like, I know I've sent you a few. What's some of the things that you've seen?
To think about? Oh.
Yeah, geez, because there's a few, and we've talked about a few of a variety, but...
So we think about, I think the first thing you think about when you get a rooming house is a specific type of property. So again, when I was talking before about fitting a square peg in a round hole, every insurer has something called a target market determination. So a target market determination should be on all insurers' websites, and it tells you exactly the type of properties that they insure or the purposes and what they insure. So when you get to something like a rooming house and you've got things like shared spaces, multiple unrelated tenants that are living in the property, multiple leases under the one roof, a lot of your normal domestic insurers out there, they won't recognise the property correctly. And if a client, again, goes online and does an insurance policy, anyone can get through a process to get to a premium. But again, getting to the end and fulfilling a policy doesn't mean it's adequate cover.
No, you just ticked a box.
You just ticked a box, right? We've got insurers or access to insurers where they will specifically insure rooming houses. So what they will do is they will actually allocate the 5 different leases on the same property. So they'll insure the building as a whole, and then underneath that they'll offer separate landlord insurance for each separate residence, and recognise that there are shared spaces, so they call it multi-dwelling tenancies, and they will offer landlord insurance as well for each and every room or tenants under the...
because technically it's 5 leases, it's 5 different sources of income.
Absolutely. So, and I think what you've got to do is you've got to make sure when you're buying a rooming house that the insurance is set up so that not only is the building covered, but then your individual leases and the tenancies are also covered. So you've got landlord insurance. So if one tenancy, say for example, breaches their lease, then you can activate, your theft cover, if it's your loss of rent, or if it's your
damage.
accidental rental damage, or so it's really important to make sure you've got those types of covers. But then there's another layer, right? So you've got your normal residential tenancies, but then you may have things like subleases, and that brings a different level of concern or different level of insurer into the case.
Yeah. So when you mean subleases, like you've got one person that takes the master lease and their sublease, there's another 5 leases under the main lease.
Absolutely.
Yeah, we've actually seen a couple of like that. Yep.
Yeah, and what that does is that adds another layer of complexity. And what you'll do is you'll knock out some insurers, because when it comes into subleases, some insurers who may offer rooming house insurance for 5 tenancies, they're out of the picture because they don't offer subleases. So then you've got to go to other insurers. So it's really, really important, and that's where the broker's role comes in. Is that we will have those conversations with you. We'll have the conversations to understand, the type of property, how many rooms are being let out, are there shed spaces, what type of lease you've got in place, does it meet, the RAT, and I think the important thing to do is, you have that conversation to understand the client's needs, so that when they do need to activate the policy, they've got the right policy in place.
Correct. And, previous guest on here, Michelle, who's a property manager, I asked her, what are your top 3 things as a owner of a investment property that you should be, that you should think about? 2 out of 3. 1, her 3 was get your finance sorted. 2, or a good finance person, because they're going to optimize your investment. 2, get a good insurance broker.
Yeah.
Because not all properties are the same. So that was they're coming in hot with, that's someone that's from a property manager. Get the right insurance, because at the end of the day, you're going to spend $1.3 to $1.5 million on a property, right? Mate, $3,000 a year. I'm just spitballing here, right? But if you have to pay $3,000 a year for the right insurance, right, for a $1.5 million, $1.3 to $1.5 million property, well, if we work out the percentage, it's nothing, right? So,
and you're probably receiving a really good yield on the back of it.
Correct.
So, with rooming houses, you do receive a really good yield.
Yep.
The thing is that you just need to make sure you've got the right insurance. So I can take us back to sort of the early days when we started to see a lot more of these rooming houses come in. Yep. Talking to a few domestic insurers, even the premiums that were coming through were a lot higher than specific insurers. So at the end of the day, I think the important thing is just make sure you've got the right cover. If you can't look at your insurance policy and identify exactly what is covered, how it's covered, and feel comfortable with your coverage, then I think you should revisit it. Because you should be able to say, okay, so my building is covered, each room is individually covered, I feel comfortable with the type of cover I have. So if something was to happen, I'm comfortable that, it will, we'll be able to make a claim and it will be a positive outcome.
Yeah.
So
100%. Like, I think, some of the policies that I've shown you, you've just gone, whoa, yeah, okay, cool. And, they may be paying quite, maybe, let's call it $2,000. And you go, well, you're paying $2,000 for the wrong cover. So you're actually not covered and you're paying $2,000 anyway. So why are you throwing away $2,000? You went away, did the research, came back and go, well, for the right cover, it's this. Could be more, could be less. I don't really know what. But in this case, I think it was a little bit more, but it was the right cover.
It was the right cover, absolutely. Yeah. And especially when you've got different factors that come into play. Things like head leases or subleases or those sort of items. You just got to make sure that you've got the right coverage, because I can tell you right now, the last thing you need is an event to happen and they won't pay your claim.
Yeah. That's the heart. Yeah. But that's the fear of so many, right? Right. And I mean, I've been through a claim recently, right? And it wasn't the greatest experience, but I learnt quite a bit of bit from that. And I've been paying insurance for 11 years. It's the first time I've made a claim. I've ever had to make a claim. But knowing that, hey, I'm going to be covered gives you a bit of peace of mind. And I've got the right insurance.
Well, that's the other thing. The role of the broker, you come to an insurance broker, it's a one-stop shop. So, we would take a client, we'd be able to review their position, do a really good needs analysis on the client, understand what their needs are, what they need, find an insurer that will best suit the insurer, be able to help that customer, and then, we'd be able to each year have a look at their position again. And then even if a client comes to a position where they need to make a claim, clients can come back to us. We can help advocate. We can lodge their claim, advocate for them with the insurer so that they are 100% looked after. I think the need of an insurance broker is growing more and more and more each day because, like we say, each individual situation is more complicated than what it was 5-10 years ago. And we look at the world today, even with the amount of stuff that's going online, the different types of businesses that are opening, small businesses coming into, the network. It's just very, very important to be able to engage someone that you can trust, that you can know, and then build a relationship over time. Because I think that's just like a mortgage broker. It's just so important.
100%. I think, you're looking at the landscape of things. I talked about how many people use a mortgage broker. I think what's the stat? Sorry, a insurance broker. What would be even a more interesting stat to see is how many people in Australia with an insurance policy don't review it every year.
Oh, absolutely.
That'd be an astounding, or they review it, but they don't have the time or understand what they're actually shopping around for, and they'll review it on price. I get it. Everyone's trying to save a buck, but man, if you've gone for X insurer and they're saving you $500, but your actual insurance is inferior, like why are you doing it?
We see it every day, Dion. It doesn't matter if it's professional indemnity. It doesn't matter if it's a commercial property, even if it's a residential property. Clients have got to understand, or the public have got to understand that over the last 5 to 10 years, there are new players back into the market, especially in a lot of industries. Some insurers may not have insured particular industries in the past, or some industries may have been higher risk in the past. And then you fast forward to today, where you've got new players into the market, new insurers that are expanding their risk profiles. And, we had a client a couple of weeks ago that we reviewed their professional indemnity for, saved the client close to 20% on their current policy, just by having the opportunity to have a deeper conversation, remarketed their policy. And then what it meant was it just created a benchmark for that client. So they hadn't reviewed it in 7 years. And what that means is in that time, you've got other insurers coming into the market. And what that means is those insurers have risk rated their profile. And so, the client absolutely ecstatic. We see commercial property owners as well, where, they go out and, they haven't reviewed their insurance again, 3, 4, 5 years. And, you go through the process, you understand what they've got, what they need. And there's so many opportunities out there. And I think the opportunity just to help people have good conversations with them, understand what they have, what they need, and build a relationship with them. And we see, I think that the benefit to us is that we just get to help everyday Australians. And at a time where cash flow is really important, we find the right policies, we find the fair premiums, and I think, our clients really, really appreciate the honest feedback that we give to them every day.
No, 100%. And I think that's the key, right? Is, it's like mortgage broking.
Yeah.
Yeah, I've got 40 different policies. I understand debt structure. I understand strategies. You're the same. You got over 100 different insurers. You understand policy. You understand, if this property doesn't fit this particular insurer, you're just knocking them out just by clicking.
It's just like having a funnel.
Yeah.
So you could put a client into a funnel, and then you've got, you start off with 150 or 200 insurers, and then at the end, you'll knock different insurers out, and you'll get to the end and there'll be one or two insurers that for that particular situation will offer cover.
Yeah. So if they've got different types, so let's say you've got residential, you've got a rooming house, let's call it indemnity.
Yeah.
Right. So you would do that process for all three different.
Absolutely.
Yeah. Right.
Absolutely.
And they could be with three different insurers
Absolutely.
as well. But
Absolutely.
under one, and when it comes from We Cover You, it's under the one portfolio.
Absolutely. So I think that the thing that the client gets from We Cover You is that we pride ourselves on relationship management. So we'll manage an entire client's profile. Where their insurances are based may be at different insurers depending on the types of situations that they have, because we're not going to place, a particular client who may be in a professional services industry, may be with a specific underwriter or specific insurer, because that is the insurer that is best placed for them. And, they may have, say, a farming property or a large property or widespread property, or, they may just be a normal domestic house in Brisbane City that we need to insure. So, each situation is going to be different. I think these days that one size fits all, where a client will have all their. I remember the days when you got multi-policies and all that sort of stuff. I think these days, that's probably not going to fit a lot of clients, and that's just being honest, because some insurers are just not going to cater for those types of situations, and that's where an insurance broker comes in. And so we can sort of place the client in the right space at the right time at a fair premium, and then clients feel comfortable that they can call us for anything they need. And being a ex-relationship manager as well in the commercial space, we pride ourselves on, if we're going to insure one thing for a client, let's try and cover all bases for the client, so that when they need to claim, the one thing we despise is cherry picking. So we don't want to just take one policy because that suits us. It's about making sure that, hey, let's have a look at everything the client has. If we can help the client in every situation, that means when, if we've got, say, 5 or 6 policies with us for different items, if a client's got a claim, that's a good thing, right, for us, because we'll be able to help them. We'll be able to put them on the right step. We'll be able to advocate for them, rather than that client having to go through a normal process, which, at the end of the day, it's not an ideal situation for a client, because
who's got the time to do that right now? Like I know when I sat on the phone for ages and ages and ages.
Yeah, that's a good example.
Ridiculous.
Yeah,
I don't. I had to put it on speakerphone and do work at the same time, because I couldn't spend the hour not doing anything while I waited for someone to pick the phone up.
Absolutely.
Right? And I think you make a very good point. And, we can draw some very good parallels between, I don't just want to know about what you're doing now. I want to know about everything, so I can actually best advise you on the next best step, correct your debt structure, correct your strategy if it needs it, and optimize the portfolio. And that's literally what you do. You're just doing it in the insurance space.
Absolutely. And I think every day, again, like I was saying before, you just see a different client that has different needs. And I think that the best thing that we can do is just try and be a one-stop shop for a client. So whether it's your commercial fleet for your motor vehicles, whether it's your residential property, whether it's your professional indemnity or your business insurance, your rooming houses, I think the best thing that we can do is offer our services in general for a client. And, if our clients have that peace of mind that they're with a brokerage that will be able to service all their items, I think clients feel comfortable and they come back. And to be honest with you, the best source of knowing how well you're doing is the referrals that you get from other clients. I think sometimes your phone rings randomly because I save every client, everyone that rings my phone, I save them in my phone. So when I get a random number call, well, I wonder who this is going to be.
It's either a underwriter.
Yeah, it's either an underwriter
or a new client.
Or it's someone random. And a random client calls up and says, hey, so-and-so referred us to you and we really, really would like to engage you for some services. And then you start to track back and go, oh, how did you get the referral? Or who gave you our number? Or who gave you this? And then you just feel like it always tracks back to different clients that you helped originally. And I think that that always serves true to the service that you provide. And it gives you comfort to know that, hey, you know what, that customer's walked away happy so that they've referred us to somebody else. So, yeah, those calls are sometimes the best calls.
Yeah.
Because they come out of nowhere. There's no opportunity to sort of plan for the conversation. But you come out of it feeling absolutely great because you track back to where that came from.
Yeah, so you've actually made a difference in someone's life.
Absolutely.
Or someone's wealth creation strategy. Yeah, protected their asset. That's one of the biggest things. That's how you create wealth is protect the assets that you do have.
Yeah.
Right? Because for the worst case scenario and then build on the ones that you want to.
And remember, our product is not fun. I hate to say it.
No,
people
no one wants insurance.
People dread paying for insurance. But at the end of the day, it's a necessary evil, right? Like you've got to pay for it. You've got to have it to operate. You've got to have it to settle your loans. You've got to have it for the situation or, if an event does happen, you need to be able to call on it. We're not putting people in dream homes. No. We're not.
No, you're securing the dream home so they don't have to go and be homeless for
absolutely
for months if the thing burns down, right?
But like I said, it's people don't. If people are coming to us off the back of referrals, you feel like you've made a difference to them. So it's it's good.
Yeah. I wasn't going to ask this, but one of the biggest questions I get asked is how do I get paid?
Yeah.
Right. And I always say, it's usually if and when the loan funds, right? That's for normal residential lending. Now I do more than just residential lending. I do a bit of commercial, do a bit of development finance, and we talk about how much work's involved in that, and then that's something completely separate. But do you mind if I ask? Because I don't know, and I mean, frankly, I don't care. Like as long as you're well remunerated for your services, because the service you do provide is out of this world. So how does it work with you guys?
So there's two ways. First of all, depending on the breadth of effort that we need to go to for a client, we do charge an upfront broker fee. Usually, for residential properties, we may charge $70 because it allows us to get out there and find insurers and the time that we spend, plus the administration of it. With commercial property or commercial insurance, it can be anywhere from $100 to $500, depending on how long we take. Some policies can take us good 2-3 weeks to organise.
Yep.
And then after that, we also get paid a commission from the insurer. So, there's two ways that it gets paid, depending on the type of policy, depending on the product, the insurer. But really, there's two ways. You've got your upfront brokerage fee that we charge, which is more of an administration fee. And then it's your, because you've got a lot of ongoing services that can come into play. You've got your renewal that comes in. You may need things during the year that you can call us on. So, all that sort of covers, the space that we're in.
And at the end of the day, that's not a lot.
No, it's not.
$70 is not a lot for, imagine, if I had to go work out my hourly rate.
Oh, absolutely. Well, we feel like we undercharge, to be honest with you. But I think we're comfortable to say that, we're providing a really good service to a client. And at the end of the day, if clients want to come to us, that's up to them, but they see value in what we do.
Especially if they're being referred on to you.
Absolutely.
That's the best. They're the best type of clients. But I think, your industry and my industry are very much the same. Like, if they pay out or close out down a policy or a loan within a certain time, I know that I get everything clawed back. So
Absolutely.
this is where we talk about, hey, look, your intention is this. Yeah, I can help you, but it's going to cost you this, because you can't go to a doctor, as in, you can't go to a specialist and just walk out of there without some trade-off, right? It's the same. I look at it as the same. Like, you're a specialist in your field, right? You've been asked to do a job, and if it's something very specific and you know that it's X, Y, Z, it's going to take you this many hours, and here are some hairs on it, or hey, look, I know you're going to do this and you only need it for this. Well,
I'll give you one situation that happened last week. Look, I got a text at 7 o'clock at night. I had a client flying in from overseas. George, I really need this. All right. So I put the kids to bed, jumped on the computer, got what the client or got the forms that the client requested. By the time the client got into his hotel, had given him the forms to complete, and he returned it back to me. So it was about 10 o'clock at night. And then from there on in, by 11 o'clock, I had it in 4 underwriters' inbox, so that when they woke up the next morning, it was there for them to be able to give us terms for. And then the following day, by 11 o'clock, a complicated situation was made easy for a client. So I think that the thing is you've got to pick up and run with it, and you've got to value your service. So that particular client, he saw the value. He needed what he got what he needed in the time that he needed it in, because he absolutely needed that policy. And the client walks away and they value your price of what you pay.
Yep.
And also, you're working outside of business hours and you're delivering quality service to a client. And I can tell you now, if they called up either an insurance company or another 9-to-5 sort of business, I think that client would have waited days.
8 to 8.
Yeah.
Sometimes, right?
They would have waited days. By the time they picked up the situation, they reviewed it, they got it. And I don't think
that wasn't happening at all, because at the end of the day, if he's overseas, he's going to ring an overseas number.
Absolutely.
Then if it's outside of the contact center's time, then that's not going to get picked up. So really, what you did in 3 hours, it would have taken him 8 to 12.
Absolutely.
And he wouldn't have had a resolution for another 24 to 48 hours, because that person that picked up the file wouldn't have understood the situation.
No. And I could imagine the back and forth you got with that client. But that's the personalised service that we offer. That's a rare situation, but when we see the need that it's got to get sorted for the client, that's what individual brokers can do for you. We pick up strange scenarios or policies that need that tender love and care, and we can take it and really turn it around quickly, as long as we get all the information. And granted, that client, he was outstanding, because we got everything we needed, and he turned it around, but saw the urgency in it himself. It's a great outcome for the client, great outcome for us, but we're able to service those clients.
And that just shows the value. That's just value add. I didn't mean to bring that. I just wanted to have a better understanding and, just get awareness.
We're open and honest, Dion.
Exactly.
We're transparent. That's the beauty about what we do is, we've got nothing to hide. We see value in the service that we provide, how we're remunerated. We're very comfortable in saying it, because it is what it is.
It's on all the documents.
It's on all the documents. Any document you get from us, it is all available on there. I think that the benefit that we provide, clients just see value in it.
It's the time, the opportunity cost. I could be going doing something else. You can take care of that for me, because you probably know better what to say. You'll have to come back sometimes and have a conversation, just to go, hey, just want to get a better understanding so I can word this correctly. But at the end of the day, that's a 5-minute conversation.
When you call an electrician out to your house, he's not coming for free. I tell you that much.
Or a plumber. Or any of those.
I think it's $150 call out fee these days.
I had to get someone to come and just look at my roof, and they're like, it's $110 for me just to come and look at your roof. I'm okay with that because that's the way I think, right? I think there needs to be a bit of a mindset shift. Gone are the days where, advice is free.
Yeah.
Right. If you want specific advice,
things take time.
Yeah.
And if you're spending time on something, I think you've got to value what you spend on.
Yep. 100%. And again, this is all about education, right? We're going into a brand new world of if you don't have the education, you're not being made aware of certain things. It's just, oh, you do this. Because I think there's a very common misconception that all mortgage brokers work for free.
Yeah, absolutely. That's absolutely right. Yeah.
Do you work for free? I'm not trying to spark up any drama here, but it's reality. We work for ourselves, and we value. What's up here is there. I'm helping you better. I've saved someone $2,390 a month, but then they were like, "Well, why are we refinancing?" I said, "Well, your problem was this.
Yeah. Here's your solution.
Yeah. But this is a semi-development deal. I said, well, and if you're going to pay this loan out, well, I'm going to make contingencies. I'm not going to work for free. I said, well, if you pay it out in 3 months and I've just saved you $7,000, well, everything's covered.
Yeah,
you don't have to worry about it. So it's just about how you explain it to them, and they were great. They were like, "Oh, I get it now."
Yeah.
Oh, sorry, because I said, "Well,
people want transparency."
Yeah, but when you're on 10% and I'm taking you down to 6%,
that's
or
true.
6.5%, it's a no-brainer.
It is a no-brainer,
right? It's an absolute no-brainer. And also, your 10% loan expires in 2 months. Why are we paying 10% for 2 months? It's $15,000 a month.
That's nuts.
And the debt's not going down, the structure's not right, you want to prepare to sell, it's like bang bang, I am now setting you up to sell, but also restructuring your existing debt, reducing some repayments down, optimizing it there so you can sell, and then when you do sell, all your debts are paid out. Great. I'm actually putting you in a great position.
And you're saving the money.
Yeah, and you're still ahead 120K after all of that. You still have a
little nest egg.
120,000 at the end of it. So, it may not seem like much, but I think that, it's one of those ones where you inherit it from, these clients I inherited from another, I never saw it right from the beginning.
Yeah.
Because I said to them, I go, if this was me in the beginning, it would never have happened this way. You wouldn't be in this position that you're in.
We see that every day.
That's direct correlation to what you guys are.
The amount of things that we see, or the amount of situations we see where it's just about structuring it correctly.
Yep.
And when you structure it correctly, and being an ex-commercial banker, I've got a really good understanding on everything starts from the top. How is everything structured? The one thing I'll say, Dion, is the one thing that I've enjoyed most about this business is being able to sit down with small businesses and them telling me their journey around how they started, where they are, where they were, and really gives me a good understanding. And I'm true to when I started as a commercial banker, because that is the way you really build a good understanding of a client, and you get to listen to a customer story, and then it really gives you a good understanding around, well, what is the client doing? How are they doing it? What are they after? And then how can we help them? And it's basic fundamentals. You can apply it obviously in your lending space, same thing around the insurance space. And we just find that it just gives me a good understanding when I'm talking to underwriters around what type of client it is. And also those kind of questions also give me the opportunity to branch out and find things that clients may not be insured for.
Or
never had any cover for.
Yeah.
So, like we've got some businesses where you look onto their certificate of currency or their schedule, and the purpose description of their business might be this, but they're doing 3 or 4 different items.
And it's not included.
So
it's not covered.
How is it covered? The insurer doesn't know.
Yeah.
So
disclosure.
Disclosure. It's all about disclosure.
Yeah.
And they may only be doing like a 10% share into this particular sort of business or description, but if it's not wrapped into your policy and that situation occurs, especially in professional services, how are you covered? So
Well, you're not.
You're not. And I always track back to another client where they had a fantastic business on this big piece of land, but what they didn't do is disclose that they also did car parking on the land as well.
Oh, I think you told me about this.
I've told you about
this. Yeah.
And never disclosed it to their insurer. So what that means is you're putting at risk one business because number two, you haven't covered the other business that you've got operating on the land.
Yeah, because it's a different risk profile.
Because a different risk profile, but the insurer doesn't know. So if the insurer doesn't know and a situation happens, how are you covered? You're not. You're absolutely not. Especially things like legal liability, that's a big one, right? Because you've got insurers that will provide mixed use liability. So therefore they'll recognise you've got this on the property. They'll also recognise you've got something else operating on the property, and they'll have it on your insurance schedule. They'll recognise it and they'll offer it to you. The premium may change. It may go up. It actually may stay the same, but they've recognised it for you.
They've added it to the actual policy or the schedule.
Absolutely.
And they've made, and then now there's no issue.
There's no issue.
Yeah.
And you feel like you feel like, yes, I've covered all bases. Like I said to you, you should be able to look at your insurance schedule and go, actually, I've got coverage for everything I need because it's clear, it's in black and white, it's on my schedule, so I know exactly what I'm covered for.
I guess that also then tracks back to your client with the car park and the multi-use. They wouldn't even know.
No, they wouldn't.
It's not because they just go, we'll just insure for the whole thing. But there's no way. If they're not in the industry, they don't know.
No.
It's just, self-employed clients. They don't know.
Where that comes back to, Dion? Comes back to a really good conversation between a broker and a client, understanding the use.
But they wouldn't
of
have
the
used a
property.
broker.
They didn't.
They
Actually, they didn't.
They would have gone
direct.
direct.
They did.
And they wouldn't have had. They would have just had someone on the other end of the phone that just goes, "Oh, yeah, tick, 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 tick."
Absolutely.
Yep, cool. Not ask the extra question.
That's exactly what they had, and I think the ability to be able to probe and ask more questions and tell us about
Go to the site.
Go to the site, see the client. You walk to the site, and you're just like, wow, there's 4 different things happening right here.
Have you done that? Have you done that? What's that?
Yeah, have you got coverage for this? And you walk away or you have a good conversation with the client going, well, I think you need to have a deeper conversation about this.
Yeah.
And I think we need to make sure that you're covered correctly.
What would it mean for your business if that was not covered? Because that's not covered. What would it mean if that went?
I always say, how can you put a $1 million operating business at risk for X amount of revenue from this small business that is running on the side?
Yeah, which is also a tax write-off.
Yeah.
The insurance is, you write it off on your balance sheet. But yeah, look, mate, many great points today. And I'm really loving seeing your journey. Like it's improved. Even your skills on LinkedIn. Yeah, you guys are getting out there.
We've jumped on.
Yeah,
We've got. I've got to admit, I've got to give a shout out to Darren. Darren, you're doing a great job. He's our marketing guru.
Yeah.
So,
well, John's done a good job on your logos and stuff like that as well. He did the logos for this podcast and branding for this podcast as well. So excellent job. And you guys, good to see you guys getting out there. Good to see you guys learning, growing. And just like myself, learning, growing every time. If you're not learning,
every day, there's we've got an absolutely great mentor that supports us, and he's been an insurance broker for 35 years. Wow. And he says to us every day, I learn. All I do is learn, because there is always an opportunity to learn. And for someone who says that, it just rubs off on us.
Yeah.
Because then we realise, well, there is so much to learn, but you're learning from here. You're learning from experience rather than learning from the start.
Yeah, you learn from your mistakes.
Yeah.
Right? Like, or, you just make better choices, have better conversations. Oh, I should have asked that. And so the next person gets the benefit, right? And also you. But also to learn, you need to be coachable.
Yeah, absolutely.
Right? And I think that's the key thing. And be willing to have that open conversation. It's just like when clients come to you or come to me, you've got to be that little bit of vulnerability going, hey, I actually don't know everything.
Yeah.
This person's not here to make my life worse. They're actually here to make my life better. So let's just have a conversation, and whatever comes of it, comes of it. And then at least we have a clear path forward, right?
Absolutely. Yeah. I think the other thing that is such a great support to our all insurance brokers is the underwriters out there are phenomenal. Like, you could call an underwriter and I could pretty much pick out, I have not dealt with an underwriter that doesn't take the time to be able to help explain, understand, clarify. It is phenomenal in the market, in the insurance market, how open our underwriters are.
So just for people who don't know, what is an underwriter?
So an underwriter as an insurance broker, so we'd approach an underwriter to be able to place the insurance for us. So they would say, for example, you've got different underwriters that hold the policy. They are the ones that underwrite it, and each different underwriting agency would have their own wording towards different industries.
Yep.
It's great for them, the way that they interact with you as an insurance broker. They give you the confidence in knowing that you've placed the client in the right space.
So if you were to go direct to insurer, you would not actually be dealing directly with the underwriter. You'd be dealing with a representative of the underwriter, and then they have to pass the message on, interpret what you're trying to do, and then pass the message on to see if it gets approved.
No, they are the decision maker.
Oh, right.
So
okay.
the underwriter is the decision maker.
Oh, no, I'm talking about if I ring a call center. I'm not talking about the underwriter.
No,
right?
you're not talking
if I'm
to
going
the
direct to that insurer, me as a
No.
consumer, not coming through a broker, goes direct to a call center. I'm not dealing with the person that makes the decision, right? I'm dealing with someone that just gets your information, and then they have to have enough knowledge to interpret that, to take it if it's out of the scope to take it there. Whereas I don't have. I cut all that out, going straight to you.
Absolutely, and that's the benefit of the broker is that we have access to each of these underwriters.
Yep.
And they will tell you straight away, yes, it's a risk
like
that we want to place. It's like your credit, exactly. Yeah. They will say, yes, we will place a risk. No, this is outside our risk profile. Or they'll say, yep, we'll only insure up to X amount. Or the other thing they do is they also guide you to go, okay, so even though we won't do it, these are the 3 specialist insurers that will, because we've seen these insurers do it before.
Yeah.
So the benefit of the underwriters, all the different underwriters across Australia, is that not only will they help place your policy, but if they can't place it, they guide you in the right space and saves you a lot of time.
Yep. Awesome. Well, we're going to wrap it up there, because I think the next episode needs to be on commercial, something to do with, I think, the commercial.
Absolutely, yeah.
I think that's quite a big thing. I do a lot of commercial lending, business acquisition, asset finance. I don't do the asset finance, but clients with assets that they've leased, etc. So I think that'd be a great next topic. But just to wrap it up, the information on this podcast is very general in nature, doesn't take into consideration your actual requirements and needs. If you do have any questions around insurance, speak straight to George Finance, speak straight to me. But George, if someone wanted to get in contact with you, how'd they do that?
Well, there's 2 ways. You can either jump on our website at www.wecoveryou.com.au or jump on our LinkedIn, both myself, Darren, so George Sian or Darren Trendler, or you can always jump onto We Cover You LinkedIn as well.
Yep.
And our details are all available. You can give us a call, you can send us an email or a request, and we'll get on to you.
Yep. Easy. Thanks
for having us.
Thanks for having us. As usual, if you guys have learned something from this, completely free. I don't advertise. I don't pay anyone to be on here. If you've learned something, pass it on. That's all I ask. Like, follow, subscribe. It's the best way you can do it. It's all free. It doesn't cost you anything to do it. You can find me on Instagram at Dion Finance Specialist. The podcast is at Finance This Property That Podcast. We're on YouTube, Apple, Spotify, all your usual podcasting platforms. And like always, I'll see you all on the next episode. Thanks, George, for coming on. Appreciate it.